Hello everyone. In Malaysia, we have two types of banking systems, which is known as Islamic banking and conventional banking. These two types of banking systems have their own principles.
Islamic banking refers to a system of banking that operates in accordance with the principles of Sharia law. In Sharia law uses a moral and legal framework for Muslims. Meanwhile, conventional banking is the traditional banking systems based on capitalism. Different between Islamic banking. Conventional banking is focused on generating profit through interest charges on loans and paying interest on deposits.
There are some differences in principles between Islamic banking and conventional banking. First one is the absence of interest-based riba transactions. Very differences between Islamic and conventional banking is the prohibition of interest. Islamic banking does not charge or pay interest on any loan or deposit. Reason: the functions and operating modes of Islamic banks are based on the principles of Islamic Sharia. Second is the avoidance of economic activities involving uncertainty. Gharar emphasizes that financial transactions must involve an actual exchange of goods or services, ensuring that speculative activities, such as gambling, are avoided. Meanwhile, conventional banking does not require for asset-backed transactions. Transactions may be purely financial. Islamic tax, zakat. The modern Islamic banking system. It has become one of the service-oriented functions of the Islamic banks to be a zakat collection center, and they also pay out their zakat. This integration of zakat into their services reflects the broader ethical and social responsibility of Islamic banking. In conventional banking, it does not deal with zakat. So, what do you guys think? Would you choose between Islamic banking and conventional banking?
Conclusion: Islamic banking has a lot of advantages compared to conventional banking. The primary difference between Islamic and conventional banking lies in their guiding principles. Islamic banking is rooted in ethical and religious values, aiming to promote fairness, transparency, and social responsibility, whereas conventional banking focuses on profit generation through interest-based financial transaction.
Can I know about an Islamic banking principles? How it's reflect ethical and professional conduct in financial dealings?
Yes, sure. Both banking have 4 principles each.
Can I get an explanation from you?
I will give you an explanation. First, we have fairness and justice. In Islamic banking, both parties share the risks and rewards of transaction together. The benefits is relationship between the bank and customers is more collaborative than adversarial. The profit and loss sharing model is considered fairer because both parties are treated equally, and there is an ethical obligation for the bank to engage in transparent and responsible business. In conventional banking, the bank's profitability is often independent of the success or failure of the customer's venture. The bank earns interest regardless of the borrower's financial performance. This is seen unfair because the bank profits while the borrower may be burdened with debt. This creates an inherent power imbalance in favor of the bank. Second, we have transparency and disclosure. Islamic banking emphasizes transparency in its financial dealings. In contracts like murabaha, the cost price and the markup are disclosed in advance, so both the bank and the customer have a clear understanding of the terms. This transparency helps in avoiding hidden fees or charges, which fosters trust and professional conduct. But in conventional banking, they promotes transparency, interest rates, and fees that sometimes be complicated or hidden in fine print. The overall pricing structure may not always be as clear as in Islamic banking, leading to potential confusion or disputes over the term of the loan or invest. Third, we have social responsibility and ethical investing. The ethical constraints in Islamic banking ensure that the industry promotes social responsibility. By financing only Sharia-compliant sectors, Islamic banking ensures that their investment are aligned with the greater good of society. This promotes sustainable and socially responsible investments, such as those in healthcare, education, and infrastructure. In conventional banks may finance businesses that do not align with ethical or social norms. However, many conventional banks are increasingly focusing on sustainable finance and green bonds, but these practices are voluntary rather than mandated by law. Lastly, we have ethical risk management. In Islamic banking, the shared risk model promotes responsible risk-taking. The bank and the customer both face potential profits or losses, which encourage more prudent decision-making. This helps in ethical risk management, as both parties have a vested interest in ensuring that the venture succeeds. In conventional banking, the risk is often transferred to the borrower, and the bank's involvement is primarily focused on guaranteeing interest payments. This can sometimes lead to irresponsible lending practices, such as offering high-interest loans to individuals with poor credit history, knowing that the bank will still earn interest regardless of the borrower's financial situation.
In Malaysia, we had 2 examples of Islamic banking and 2 of conventional banking practices that's demonstrating these differences in the Malaysian context.
For Islamic banking, we have Maybank Islamic's home financing account. This example of murabaha, where Maybank Islamic buys the property and sells it to the customer at a marked-up price. The profit is disclosed upfront, and the customer repays the bank over a fixed period without any interest. This is in line with Islamic banking principles of asset-backed financing and risk-sharing. Besides, we also have Bank Islam's Mudarabah investment accounts. In this account, customers deposit money into the bank, which then invests the funds in Sharia-compliant venture. The bank and the customer share the profits according to a pre-agreed ratio. If there are losses, the bank bears the loss of effort and management, while the customer losses only the invested amount. This exemplifies risk-sharing and ethical investing in Islamic banking. Different from conventional banking, which has CIMB standard home loan. In this model, the customer borrows money from CIMB and repays it with interest over a fixed or floating rate term. The amount of interest is predetermined and does not depend on the performance of the property. This reflects the conventional interest-based system and risk transfer principle. Moreover, conventional banking also have public bank's fixed deposit account, where customers deposit a fixed amount into the bank for a set period and earn interest at a predetermined rate. There is no element of risk sharing in this transaction, as the customer is guaranteed the principal amount plus interest at maturity. This is an example of interest-based banking in conventional banks.